Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, good evening. Welcome to this budget special webinar. We will wait for 1 more minute so that more people can join. Okay, so let's just start after a minute. All right, I think we can start now. So yesterday we witnessed a budget session, which was one of the very important event of the year. So in this webinar, we will dive into budget outcomes and its profound impact on equity and derivatives market. In our expert panel, we have Mr. Devarsh Vakil, Deputy Head Retail Research, and Mr. Vinay Rajani, Senior Technical and Derivative Analyst of HDFC Securities. So they will uncover the key opportunities and strategic insights, and also they will answer your burning questions. So let's just get started with this session. So my first question to you, Devashi, is that we would like to get some overview of yesterday's budget session. What was the key highlight?
Sure. So, is my screen visible?
Yes, it's visible.
Okay. So we have issued two reports. One is from our institutional research team. Fiscal prudence continue to undeterred. About 27 slide presentation is there, which is available on our website. And also our retail team has come out with a report. I will take some of the key slides from this presentations for all this report and show it here as a part of our budget analysis. So first and foremost, as everybody keeps tracking, the most important number is the fiscal deficit, and it has come down from 5.6% to 4.9%. So as we can see on the screen, the COVID time, almost 9% fiscal deficit was there. Gradually, we have a glide path, and eventually we would like to bring it down to about 4 to 3%. So gradually, fiscal deficit is coming down, and it is because the higher revenue deficit is also coming down. Interesting portion is the capital expenditure as a part of the total budget is now gone up to 31%, and this is very good. That means that money is being spent on various infrastructure and capital expenditure projects that will sustain our growth. So we feel that the growth estimates which are there in the budget are very conservative. The revenue and the non-tax revenue estimates are also very conservative. So the math of the budget is very credible. Some of the areas where maximum money is being spent, first is the rural development. So compared to the budget estimate of 2390, the revised estimate now, about 2658 billion rupees will be spent on rural India. And some of the sectors where it is being spent is Pradhan Mantri Awas Yojana, the Manrega, and the Gram Sadak Yojana, Pradhan Mantri Gram Sadak Yojana. So this 2650 is primarily spent in these three areas, and that's where we feel that the in the rural India and at the bottom of the pyramid, we will see a lot of money being transferred. Growth should happen there, and the companies which cater to those areas, especially the consumption related areas, should continue to do well. Second important factor is the revenue expenditure is gradually coming down when the capital expenditure is going up. So we are investing for the growth. So as you can see, now the Capital expenditure is about 3.4% of the overall budget number. Corporate tax as a corporate capex as a percent of GDP is about 15%. This number needs to grow. Earlier it was 28, 18, and now it is a concern. So government is looking that private companies should spend rather than the government, and that is the expectation from the government. Now, taxation, there are a lot of changes, and all of you know those changes. And because of that, tax as a percentage of GDP has come down to a number of 18.5. Now, though it looks optically high, that 18% of the GDP is now going towards various combined towards government taxes. But if we compare India's numbers compared to the rest of the world, around 18 and a half, we are nowhere in the top. Many countries in Europe and other parts of the world, the taxation are much higher than what we have. So 46% in France is one of the highest tax to GDP ratios. Here we are about 18%. Now, if you see this, corporate tax is about 3.2% of GDP, and income tax has now surpassed the corporate tax. So in India now, this blue line is corporate tax, and that shows that corporate tax is at 3.2%, while income tax is 3.4% of GDP. So first time India income tax is more than the corporate tax. This is an important number, but when we compare this number compared to the global averages, 8% is the average of OECD countries. So we think that this 3.4 income tax number is very high number. Eventually, this number can go to 4, 5, 6% as more A, taxes on higher income increases, B, more and more people give taxes. So in India, about 8 crore people pay income tax, and if we see, this is the number which I've taken from the FY24. Out of 8 crore taxpayers, about 50% has shown income less than 5 lakhs. And as we increase the slab of lower and lower income, more and more people are showing income up to the tax level. So this is a very big concern for India, and I think subsequent budgets and everything will focus on this number. Now, important measures are the new tax slabs, and compared to the last time, we have a new slab. Between earlier it was 3 lakh to 6 lakhs, now 3 lakh to 7 lakh. 6 lakhs to 9 lakh was another step that has been increased to 7 to 10, 10 to 12, and these are the differences. So for a person who's earning about 16 lakh, the total tax including cess is about 1.5 lakh. So that was 1.7 lakh. It has reduced to 1.53. This is the benefit given. Obviously, the standard deduction has been increased from 50 to 75. So these are major tax related measures and broad macro related numbers. Now, I'd like to spend some time on various sectors. So if you see some of the sectors where the budget is beneficial, one is the Pradhan Mantri Awas Yojana, where housing finance companies like Awas, Home First, and Canfin Home can get benefit. Then we also have certain provision which are beneficial for insurance companies. The sectors like road and urban housing have got a lot of positives. The Jal Shakti mission has got a lot of allocation. So the companies in the metal or plastic pipes may get a good demand. And everybody knows that the government has tried to give a lot of packages for their allies which are there in the NDA government. So Bihar and Andhra Pradesh have got large allocations. Total 260 billion projects have been given, allocation have been given for various road projects in Bihar, and similarly around 150 billion towards construction and development of Amravati. So the cement and building material companies who are there in Bihar and Andhra Pradesh are likely to do well. Cement companies who are there are likely to do well. Electric vehicle and lithium-based specialty chemical players like Neogen has also got some positives from this budget. So all this information is available in our report. Apart from that, another report where sector-wise, what are the various provisions and what are the likely impact on the sector has been issued by our retail team. So I would request those who want to understand this in detail can go through these reports. Over to you, Sunal.
Yeah, thank you so much for a very nice overview about what we got from the budget session yesterday. And of course, the income tax crossing above the corporate tax has been the talk of the town since yesterday. So that was the main point that you also highlighted. So now, Vinayji, I would like to ask you that, let's come towards markets. How is market set up right now after the event, and especially from the derivatives perspective? So what are your insights about this?
Yeah, thanks, Sonali. Is my screen visible?
Yeah, it's visible.
Yes, visible.
Yeah, sure. So yes, so I would like to show through my chart. So basically on 19th July, we saw that Nifty hit an all-time high of 24,855. And from that level, we've seen that 800 points correction. Yesterday, Nifty hit a low of 24,074. So almost 800 points correction we have seen after 19th July all-time high. So what has happened is like Nifty has fallen, Bank Nifty has fallen. But if you were to look at the recovery from the small cap and micro cap space, that has been phenomenal, and the breadth of the market remained strong, especially in the last two trading sessions. So from yesterday's low, Nifty has bounced back sharply. So from the low of 24,074, Nifty recovered and closed almost at the high, and yesterday's close was almost around 24,500. So recovery is nice, and this is recovery has come from the important support. This was the crucial support, that Fibonacci number and percentage that we have been tracking. So 24,000 has been a very strong support technically, and if we go by the derivative data also, there has been significant put writing happening at 24,000 strike price, and along with the technical, if we combine the derivative data also, there was a support at 24,000. So Nifty gave respect to it and bounced back from around that level only, and today we have seen that Nifty, though it did not recover, witness a fall of buying, and Bank Nifty also witnessed some selling. But micro cap and small cap indices, they have actually done very well, and breadth of the market was quite strong. So looking at the chart, I can see that though the trend has not been that bullish, but sectoral rotation and stock specific bullishness is still there in the market. So as far as Nifty is concerned, we believe that 24,600 is a crucial resistance in Nifty that we need to track closely. If we see a close above that, then we can expect a resumption of an uptrend. And on the downside, as yesterday we saw Nifty taking support at 24,000, that remains the strong support. So 24,000 on the downside becomes a very strong support. So we can say that overall in last 4-5 session, Nifty has remained in the range of 800 points. Still we are into a range bound kind of phase. There is no directional move either side. So we can say that we are down but not out yet, because this is not a reversal as far as charts are concerned. So unless we see a breakout or breakdown above the resistance and support, we will be not be taking aggressive view on the either side. So 24,000 is a very crucial support for the Nifty. If we see close below that, then we can expect some more weakness in the indices. But till then, the trend of the market is likely to remain into consolidation, and 24,600, which happens to be the last 3 days high, should act as a strong resistance. So we need a close about 24,600 to take an aggressive long view. But till then, we need to play a stock specific and sector specific. As I said, that Nifty's micro cap index, which is a mid cap and small cap index, has actually has hit an all-time high in today's session on closing basis. So significant recovery from the lower level. So that is giving some confidence that even if we trade here and with appropriate stop losses, there are some ideas which are giving good returns in the short term as well. So this is the positive point about the markets. And as far as Nifty is concerned, I have already shared 24,000 on the downside and 24,600 on the upside. Once we get a breakout on closing basic on the either side, then we will take a aggressive view. But till then, take a stock specific and sector specific bullish view. Over to you.
All right. Yeah. Thank you so much for your view on Nifty. But as we are seeing some weakness, especially in the bank Nifty for last few days. So do you think that, let's not talk about Nifty here. I'm, concerned about bank Nifty. So do you think that is it a reversal from the top that we had got a few days back? Because there we are seeing a little bit of weakness. So I would like some insights about bank Nifty as well.
Yeah. So to be precise, on 4th July, Bank Nifty hit an all-time high of 53,357, and from that level, gradually we have seen that it has come down to the level of 50,784 in today's session itself. So yes, for last two trading sessions, Bank Nifty has been underperforming significantly, and we have seen that. Sorry. So we have seen that IT, FMCG, and pharma, these were the three defensive sector which actually performed very well after the budget session, and those are the sector which are actually giving support to the market, and those are the part of Nifty. And Bank Nifty is not able to take a leadership as of now. So this could be a temporary or short-lived, we can say. Sector rotation may take place, though we have seen underperformance, and Bank Nifty has almost corrected around 3,000 points from the high. But if we were to look at the overall support, we believe that today's low around 50,900, there is a strong support which is derived from the 50 days exponential moving average that we used to track on the technical basis. So 50,900 is a very crucial support. And if we go by some other evidences, on 4th June, when election result came, the low was 46,000, and from that level we have seen a recovery of almost 7,000 points towards the 53,000. So if we take this 38.2% retracement of the entire 7,000 point rally, that also comes around 50,600. So there is a positional support between 50,600 to 50,900 derived from two different rationales. One is the 50 days EMA, the another one is the Fibonacci retracement levels. So we believe that we are passing through the result season. Still, ICICI Bank and Axis Bank, which are carrying a good weightage in the Bank Nifty, are yet to announce the results. So the volatility will be there. But as far as index is concerned, 50,600 to 50,900 is a crucial resistance, support. So that need to be tracked. And as far as resistance is concerned, yesterday's high becomes the strong resistance, that is around 52,500. So we are into a choppy trend, we can say, as far as Bank Nifty is concerned. Nothing is looking like a directional trade as of now. So as of now, you need to just buy on a dips and sell on rally. That kind of strategy should be there on the Bank Nifty. So 52,500 is an important resistance. Once we see Bank Nifty taking out that level, then we will take an aggressive long view. And if we see Bank Nifty breaching a support of 50,600, then we will take a positional downtrend view. Till then, as like Nifty, I said, it is into a range. Bank Nifty can also be considered into a overall range only. So this is the correction as far as current status is concerned. This seems not this is not looking like a big reversal on the downside, but it is all conditional. We need to follow the levels. 50,600 is a strong support and 52,500 is a strong resistance, and accordingly we have to play the strategies in the Bank Nifty. So it has seen a nice correction in last 2-3 sessions, but again there could be a bounce back in the index. And as I said, positional and overall view remains on a conditional basis, and we need to follow the levels which I have mentioned. Sonali.
Yeah, thank you so much. So overall, it's range bound, but of course, we have got the support and resistance levels for both Nifty and Bank Nifty. Now, Devarsh ji, between all these insights, what clues are we getting from the institutional data? What would you say about that?
So when we look at the institutional numbers, what I see is that the flows are very strong from the DIIs, the domestic institutions. We saw the number of SIP, which was around 21,200 crore for the month of June. That gives a lot of firepower to DIIs. total net inflow into equities was about 40,000 crore for a month. And if I look at the numbers for the year, and to simplify, just look at the dollar numbers, we have got about $29 billion into domestic mutual fund, which is even higher than 23 number, which was very high, 22. So even only in 7 months of this calendar year, we have already got 7 billion more compared to last year. So strong flows are available with the domestic institutions. Compared to that, FIs are actually putting money more into the debt market compared to the equity. In 2023, FIs have brought in about $21 billion into India. Compared to that, only $5 billion have been invested till now in FY20, the calendar year 24. So compared to 21, only $5 billion, while DII $29 billion have come in. The foreign institutional investors have put in about $10 billion into the debt market side. So debt market is becoming a little attractive there compared to the rest of the globe, where our currency is strong and our the yields are higher. So now, once the budget is out of the way, two important events, the election and the budget, both have been now over. We feel that the FIs flow can actually start coming in a larger amount, and that means that the sectors which are traditionally FI favorites like IT, FMCG, blue chip stocks, or pharmaceuticals, those companies should be kept on radar, because I see that since FIs have put in less amount of money, there will be some catch up there, and we can expect more money to come in from foreign institutional investors post the budget. So we should focus on IT, pharma, FMCG stocks now.
Sure. So we have got a fair idea about sectors that we can focus about. Even in the beginning of the session, in the overview of budget, you had given us the basic idea about which sectors are now in focus. But now, Vinay ji, I would like to ask you, in detail, can you give us an idea of which sectors are now into focus, connecting to the companies from that sectors?
Yeah, sure. So the one sector which Devarsh just mentioned is the Nifty IT index. So I would like to show, if the screen is visible, this is a weekly chart of the Nifty IT index, which actually broke out just before the budget. And we all know that Infosys and TCS, the largest IT company, posted a very good result. And after that, we have seen a nice breakouts in the Nifty IT index. So there is a positional bullish setup on the Nifty IT index. This is the monthly chart, and we can see that whatever high which was made in the month of January 2022, that has been taken out, and this pattern is quite convincing if you were to go by the technical pattern. So it looks like that IT index is here to stay and likely to give good alpha in trading as well as for the investors also. So looks very convincing setup. IT is looking very strong. The another sector I would like to discuss is the Nifty Pharma. So Nifty Pharma is also another sector which is trading around its all-time high. So in the month of June, we have seen that it came out from the consolidation previously. For last 3 months, it was into a narrow consolidation, and that was actually taken out, and follow-up buying can also be seen in the pharma space. So IT followed by pharma. The another sector which I would like to discuss is the FMCG. So FMCG in this month, in the month of July, has already risen at 10%. So it is a risk reward ratio not that much favorable, because after a 10% rally, it becomes very difficult to get a return in the short term, for especially in the if index has gone up by 10%. So positional setup of the FMCG index is quite strong. If it comes down, show some correction, then we can take it as a buying opportunity, and dip should be utilized to take a fresh long position in the FMCG space. The another space I would like to discuss over here is the insurance space. There is no predefined index for those stocks. Like there are many companies belongs to many large houses. So insurance space like LIC India, ICICI Prudential. So there are 4 or 5 well recognized companies which is which is listed on the exchange, and they are looking good sectorally. So basically, sectorally, we are bullish on insurance space, as there has been good quarterly results announcement by some companies like ICICI Prudential, and there are also convincing breakouts on the charts. So insurance space looking very strong. As I said, IT index, it has very less to do with the budget announcement, but the way charts have been developed recently and the way large cap companies have posted their quarterly results, it looks like that IT can continue to rally from here, and it is likely to outperform the overall markets. So IT, pharma, and up to some extent FMCG at lower level, and as I said, insurance sector is looking good. We don't have a predefined sector index for that, but you can look for these stocks which are the part of insurance sector. Yes, Sonali.
Thank you so much for mentioning the sectors. So to repeat, the IT, pharma, and FMCG, these are the sectors which are into focus and which are looking positive to you. So thank you so much, Vinay ji and Devarsh ji, for giving all the information and insights about this topic. Now we are opening for the Q&A. So audience, you can post your questions into the question box and we will try to answer most of them. So I request all of you to post the questions into the question box and we will take them one by one. So the first question is that where can we get the copy of this research report prepared by retail team, which was referred in today's presentation?
So on our website, on the research section, hdfcsec.com, also on our apps, HDFC Sky and HDFC Invest, right? In the research section, we have uploaded this report. If you need also, you can get in touch with our branch or relationship manager central help desk. They'll be more than happy to share that with you.
There is next question. What is your take on defense and railways?
So these stocks are in the limelight. They will continue to do well, but the incremental allocation in the budget is not that high. That means we can see them price-wise consolidating for a couple of quarters. The valuation have increased there. There is a lot of euphoria built into those prices right now. So I would be a little cautious in allocating fresh capital into these areas as of now. Quarterly result season is going on. Many of these companies will announce their quarterly numbers, and post that number, if any company announces extraordinary numbers, then obviously we can relook at them. But at given juncture, I would be a little cautious in allocating fresh capital into stocks in defense and railways.
Sure. So there is next question. How do you see private banks doing forward?
So shorter term, they are under pressure, as Vinay showed in the Bank Nifty and other charts. But over the longer term, medium to longer term, there are a couple of triggers for the banking sector. First is, as I mentioned, India has been added to the global bond indices, Indian treasuries. So we are expecting large flows to come into Indian treasury. That means that the yields on the 10-year is headed lower. The US FOMC is likely to start cutting the rates by October, November. And by December, the US election, the presidential election will be over. So all these are indications that we are looking at a lower interest rate in FY25. That means the cost of capital for all these banks are going to go lower. That means the efficient banks will be able to earn more money in FY25, in calendar year 25 as well. But the fight for the money will increase. That means the cost of acquiring the deposits will go up. And that means inefficient banks and many public sector banks may find it difficult. So my advice would be to stick to larger banks, larger private sector banks like ICICI and Axis. That's where I think more margin of safety is there at this juncture of time.
Sure. So the next question is that why some sectors continue to underperform for so long, like chemical?
So prices are nothing but the slave to the earnings. If earning doesn't rise, the stock prices do not perform. And what happened post COVID? At the COVID time, they had a fantastic time, and many of the companies did a extraordinary profit, and stock prices went up in anticipation of those profits. Now, for the last couple of years, the inventory issues and the problem in the chemical sector is being addressed. We are seeing that the first sign of recovery is visible, and post June quarter results, which will be over in next couple of weeks, we can expect some green shoots happening in the chemical sector. So we can expect chemical stocks to start performing from next quarter as well.
All right, so that's a good news for chemical sector. Next question is for infrastructure. So the question is, does infrastructure sector look promising owing to the rural development?
Yeah, so infrastructure side, companies who are into making roads, the road contractors are going to get a lot of business, especially contractors based out of Bihar and Andhra Pradesh have got a lot of new packages. Companies who are into irrigation projects will get a lot of orders. And apart from that, large infrastructure players will get the speed, high-speed rail has got some allocation. So bullet train is getting a lot of funding. So all these players are likely to get a lot of benefits. So infrastructure is a longer term theme. We do expect that over the next many years, this company will continue to do well.
All right. So next question is about some outcome from the budget yesterday. So the question is, as I trade in F&O, what will be the implication?
So there are obviously first is the STT that has been increased, and STT has been increased on option as well as the futures. We have covered the detailed actual numbers in our report. So your cost of trading goes up by that much. That means if you are trading for a thin margin, you have to keep those higher charges in mind while taking those numbers. Then obviously the if you are doing arbitrage using F&O, so you are buying in cash and selling in F&O, or selling in F&O and buying in cash, then these short-term taxes on your cash purchases has also gone up to 20%. So that also you have to keep in mind while calculating your possible profits. Arbitrageurs or people who trade intraday, these costs can be significant and they have to keep that in mind. But otherwise, the taxation for the F&O, the earlier it was part of the business, that continues to be the case. So there is no change there.
Okay, so next question is about PSU sector. So the question is, what about PSU sector and how they will be affected post budget?
Vinay, do you want to take that?
Yeah, so 1 minute. Yeah. So PSU sector has already outperformed for last many months, and we have seen that before the budget announcement, the high of the Nifty Public Sector Enterprise Index was made on 16th July at 11,592. I'm talking about the Nifty Public Sector Enterprise, which represents the PSU sector. So and after that, we have seen that nice correction came, and from yesterday's low, it has bounced back. But selectively, we need to take view, like as I said, that some insurance company from the PSU space or some fertilizer companies can perform well. So we have to be very selective, like defense space in the PSU have already run up a lot and now looks a bit overbought on the chart. So we have to be very vigilant when we are selecting any particular stock in the PSU, because many have performed and gone through the roof. So better not to take risk in the stocks which have already risen in last 3-4 months. Better to wait for the proper running corrections and utilize those correction to go long. So it is not the time of momentum buying. They are selectively doing well. So we have to be very vigilant, as I said. And right now, short-term trend for the PSU space has been zigzag kind of and choppy kind of trend is there. So I would recommend one should stay cautious. I'm not expecting PSU space entirely to outperform. There are some stocks from the PSU space which are still leading, like NTPC has been doing well, LIC. This is not; these are the not recommendations, but I'm just giving you an example that selectively this PSU space has been doing well. But I'm not expecting leadership coming back from this particular space, because leadership has been shifted from this space to other sectors like FMCG and IT, as we discussed previously. So I feel that the kind of momentum which was there in last 3-4 months is not going to continue. Selectively, some stocks can do well, and I would recommend traders to wait for some dips to come and utilize dips to accumulate long positions. But this is the not the time to go aggressively long in the all PSU, because all PSUs have gone up and looks overbought on the charts. Sonali.
Yeah, thank you so much for the view. Next question is, taking the current market scenario, if the interest rates are to come down, can we take some allocation in any particular small or mid cap segment?
So overall, if interest rates come down, that will help the market multiples across the board. And smaller the companies, obviously the cost of capital is higher, so that will impact smaller companies more. But we also have to see the cost of capital along with the earning prospects and the valuation. Just because interest rates are headed lower, that doesn't mean that the valuation should be ignored. If company is available at an attractive valuation, and because of the lower interest rate, if earnings are headed higher, then we should participate in those small cap and mid caps. And many small cap and mid caps are doing quite well, as we showed in our chart. Nifty micro cap has closed at an all-time high, so that do suggest that participation is very strong in micro cap stocks, mid cap and small cap stocks, and that is likely to continue. So it is stock specific. We have to identify ideas, and we do keep coming out with various ideas in the MTF side as well as the fundamental research. We do keep issuing more and more reports. So if you are looking to invest into micro cap or a small cap, mid cap sector, I would advise you to go through our research reports and decide based on that.
Thank you so much. So this is the last question that we're taking. The viewer is asking about your view on Sensex.
Vinay, do you want to take that?
Yeah, sure. So let me open the chart. I hope my screen is visible.
Yes, your screen is
Yes, yes, visible.
Yeah, sure. So I don't have the today's chart, but this is updated till yesterday. So this is also in the choppy trend, as Nifty was trading into 600 point. Sensex made an all-time high of 81,587 on 19th July, and yesterday's low was 79,224. So right now it is trading into a range of 2,500 points range. So as of now, we can say there is not clear-cut trend. There is a choppiness, a lot of fight going on between bulls and bear. So tug of war between bulls and bear. There is no directional movement. So basically, some sort of impression coming positively from the mid cap and small cap and micro cap space, that if breadth of the market is positive, indices could follow back. So as of now, it has been into a downtrend for last 3-4 sessions, but there is a good chance that if Sensex does not break this low of yesterday, which is around 79,224, the trend could again resume on the upside. So that's what we feel. We were looking at the breadth of the market, and there could be a bounce back and pullback in the index going forward in the coming session immediately. So, but as I said, there is no clear direction on the higher side. It could find supply also. But going by the breadth, going by the derivative data, which also suggests that the market should remain range bound for a couple of sessions, and we have already seen running correction in Sensex, Nifty, and Bank Nifty. So there could be some sort of pullback we can expect in the coming session in Sensex as well.
All right. So that was the view about Sensex as well. So if I take everything together, we have a view on Nifty, on Bank Nifty, on Sensex. So everything is crystal clear as of now. So thank you so much, Devarsh ji and Vinay ji, for sharing your expertise. And thank you so much, audience, for joining in this session. It was a, it was our pleasure to host this particular session. So thank you so much for joining in. Thank you, Devarshi. Thank you, Vinay ji. Thanks,
Thank you.
everyone.
Thanks for having me.